Hi there, John Cowan, Ultra Realty of Texas, joining you again with another real estate message. And folks, we are in an unprecedented time for so many reasons. But today, I want to go back and revisit some points from mortgage financing. Just to let you know, currently, that's the whole point of these videos, is to keep you posted as we go through the year, what's going on in various areas. And I'm going back to financing because it's such a critical point. So what's currently happening? Let me just tell you in general. I've been doing real estate since the 70s, and I have never seen anything like this. I believe most of us will never see anything like this again. We have market changes going up and down. That's a normal. What we don't have is a pandemic that has affected the cost of money and the opportunity there within that is for you to purchase more home at less cost. What a great time for that to happen, since housing prices are on the high side of what we've ever seen as well. So let's talk about really what is currently happening right now. First off, I don't think we'll ever see mortgage rates this low again, okay? I did say that a few years ago, but we hadn't seen a pandemic effect. Hoping that we have no more pandemics in our world may be a fictitious thought, but assuming that we are at a low point in history for mortgage rates. Right now, I have lenders telling me that they can qualify people anywhere from about 2.25% to 2.75% for 30-year mortgages. Folks, of course, it varies between VA, FHA, conventional, USDA, and there's a lot of different types of changes out there that can affect that rate. But what an opportunity. So let me talk to you about private mortgage insurance, because that is another huge factor that we have seen change in the recent time period, just from last year. What is PMI? First off, private mortgage insurance. It's a guarantee for the lender with insurance that you pay for as a borrower that will guarantee that if you default, they will receive their money. An insurance company will step up and pay the mortgage company if you default. There's a cost to that, and you get saddled with that. So here's an example. Not that long ago, on a $250,000 mortgage, your private mortgage insurance cost, which is a part of your mortgage payment every month, could have been in the neighborhood of $146. Okay? Today, that amount could be $63. Folks, that's huge. We're talking about over $80 a month savings just on that component of your mortgage. So what do we consider to be a best strategy at this point? Again, some of us go back to before 1989, but in 1989, the average in our country, the median, which is the midpoint, for mortgages, for down payment was 20%. So if you ever heard your mom and dad or grandparents say, well, you need to put 20% down. Well, just because they did doesn't mean that that's what you have to do. Then let's jump forward 30 years to 2019, okay? 12% was the midpoint, okay? About the lowest mortgage payment you can make is zero, and you have that opportunity with a veteran's position with a VA mortgage, and also another government mortgage that's called a USDA mortgage. Both of those are 0% down, and a lot of folks are taking advantage of those. So that really brings that median price down. But for most people, 3% to 3.5% are the down payments that we see for FHA and conventional financing. So if you just take last year, we were a midpoint of 12%. Now, I'm telling you that you should be considering the lowest down payment. Why? Because the cost of money is so extremely low. So if you were 3 to 5%, what's best for you? you need to look at the options. You need to know that there are multiple options, even including down payment assistance programs, okay, which can contribute money to you for closing costs, when you go to finance a home. And that will add some to the cost of the regular mortgage rate that is available today. But so what? If you need help in down payment money or closing cost money, to consider one of those programs because of the low cost of money, if it adds 0.5% or more to your 30-year mortgage rate, and you're still in the 3% range, what an unbelievable opportunity. So again, private mortgage insurance rates are down, conventional, less than half of what they were not that long ago. And so again, if you come back to the private mortgage insurance and your principal and interest payment, all of that combined, look at this fact. For every $1,000 in mortgage cost, your principal and interest payment will change by only $4, okay? So here's an example. You have a $250,000 home you're looking at. John, what if we were to look at this other home down the street though, it's $20,000 more. How much would that affect our mortgage payment? $20,000 times $4 is $80 a month for a $20,000 higher cost on your mortgage. So whether you go up or down, that's a good quick method for you to understand how much your mortgage payment could change. You want to buy a $200,000 home instead of a $250,000, 4% or 4 times $50,000 would be $200 a month. It's real simple to calculate your own mortgage payment and give yourself an idea of what it really means as you go up and down the street looking at homes. So the best strategy, I think, for most people right now is to pay the minimum down payment, and then you can pay extra on your mortgage when you choose to, okay? I just had my own kids ask about purchasing and putting down a larger down payment. And folks, it was better for them, and as it is for a lot of folks, to save the cash, take the payment based on a lower down payment, and then if you want to pay extra on your mortgage principal, you can do that at any point with any mortgage company throughout the year. But you can choose to do it when you want, okay? So here's the deal. You can choose to pay an extra premium mortgage payment one time per year. One extra payment should knock off approximately 7 years off that 30-year mortgage. If you paid 2 mortgage payments extra per year, you can knock off 11 years approximately off a 30-year mortgage. What a great time it is, okay? Let me help you. I'm not a mortgage lender, but why do I talk about this? Because it's a key step before you and I start to look at the best type of home for you. I'm John Cowan. I'm with Ultra Realty of Texas. You can go to all my social media sites, look at past videos. Give me a call. Let me help you with your questions in this crazy opportunity for real estate for you to buy or sell your next home. Thanks.